Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Angelo Christian. Thanks for being on the show again, Angelo.
Yeah, absolutely, man. I'm so happy to be on here, man. I love talking investments in real estate. So thank you so much for having me, Whitney.
No, I'm honored to have you back on the show. A little about Angelo. He's the CEO of Christian Financial. He has helped tens of thousands of people with his influential coaching, real estate university, wealth management, and mortgage banking. He is also the author of King of Real Estate and 10 Habits of Highly Successful Loan Originators, and has been featured in Bloomberg, CNN, Good Morning America, Great Day Houston, Houston Chronicle, Business Insider, and numerous podcasts. Angelo, thank you very much for your time. I appreciate. I mean, it's always an honor to have you on the show, and I know you're an expert in lending and in that aspect. And I know just before we started recording, we were talking about just how you get kind of an insight on seeing just there's tons of ground up construction, and I'm just looking forward to this conversation. So, but if there's any kind of updates you want to tell the listeners, I'm happy for give them an update, and then let's jump in.
Absolutely. No, I mean, I think that, to your point, I mean, what we're seeing a lot right now in 2020 is that the pickings for multifamily they're kind of running sparse, and you're seeing investors either lower their standards for investment class, going to B or C or type properties, or they're keeping their cash on the sidelines. So what I've seen a lot of the big players, what they're starting to do is do ground up construction, which we actually specialize in with private equity and also FHA. They have phenomenal terms. In fact, we have about 6 deals that are ranging from 200 to 1,000 unit multifamily going right now with private equity and FHA. FHA is actually in the ground up construction as well, and you can get phenomenal terms, 85% loan to cost, 40-year amortizations, interest rates in the 3s. And it's also, if you think about that, you can build it how you want it, and you can sometimes, if you have control of the building side, you can also do it at a much cheaper cost per door than trying to buy something we're at an extremely high point right now in the real estate market. And if you're paying $120,000, $130,000 a door, you can probably build something for $110,000, $100,000 a door, and then do it the way you want it and have it brand new. There's not a lot of properties out there right now, and the cap rates, I mean, why would you buy something that has a 4 or 5% cap rate? You can build it the way you want it and have a higher cap rate with cheaper cost of construction. So that's one of the things that we really specialize big time here with investors, with our private equity side and with FHA, is doing ground up construction. It's a phenomenal opportunity. And that way you can actually get in cheaper because the thing is that cash on cash, if you're an investor, you want that yield to be as high as possible, preferably double digit. And what I'm seeing a lot right now in the marketplace is, cap rates 4 or 5%. Okay, after you pay the interest on the debt, there's not really, you're netting 1%. That's not worth it, man. Mm-hmm. So it's a good solution. We specialize on ground up construction. We work with big investors. Like I said, we have about $250 million working right now just on these ground up constructions as of January 2020.
Wow. Okay. So, I've heard of different groups talking about going the ground up construction route, where they've just been focused on, say, value add multifamily, but now maybe they want to consider that. But what are some maybe potential mistakes that you see people making, moving from, value add multifamily to ground up construction when, they really haven't been in ground up before?
Well, sure. I mean, obviously, if you haven't done that before, you have to be very careful with the land that you select, the location. We had one the other day that the person bought the land. I don't know how they did this. We weren't involved with them, but it was in a major floodplain. And then it was just they'd have to pass off that insurance cost off to the to the end buyers and the end users that would be leasing it out. And so one of the things I think obviously need to be very careful about the site location. And then the construction company that you actually use, you definitely want to use like one of the companies that we work with closely. You can look them up as Pelican Builders. They're very famous in the southwest region of the country for building multifamily. So you want to be obviously working with a reputable builder or construction company that can actually pull this off with a good quality job, and then also for a good price. So I think that those are going to be the two main aspects. One thing that I want to go back to, I was talking about Grant Cardone earlier, and you can see that, obviously probably your viewers, followers know who he is, and he runs a large syndication for multifamily. And you can see like most of his investment class has been in the southern hemisphere of the United States. And he's basically, if you look at some of the stuff, he's looking at buying stuff right now in Maryland because he can't find any deals, and normally like he's in Florida, Georgia, the Carolinas, Texas, and he's not finding it. He's having to basically revamp some of his investment criteria. He would never buy anything in Maryland. The fact that he's even considering that right now is telling you that it's drying up. You have trillions of dollars chasing after the same things, and everyone's trying to find yield. And it's like, hey, man, GroundUp Construction sounds good. Also, a really interesting thing that we've gotten heavy into is senior living. Senior living is a wonderful investment, and then we can also do with the agencies through Fannie Mae.
Do you see GroundUp for senior living as well, or more of that?
Yep, we do. We're actually seeing it. That's something I'm personally involved with as well. Is I like the senior living investments that with my own portfolio that I'm investing in. I really like the senior living, and I think it's a great alternative to consider in addition to multifamily. And the yields have been shown to be very attractive. The other thing is that if you think about it, and from my experience, that there's a little bit more security, in my opinion, dealing with senior living than multifamily, because, obviously renters, I think everyone has the ideal goal to own a home, and that a multifamily sometimes can be viewed as a pass through, whereas, senior living, that's normally where they go, towards the end of their life. And with the baby boomers that continue to retire, at the rate that they are, for the census, that has a lot more stability. And you can also work with a lot of, government agencies to collect some of the rental income off of that. So, I mean, they're obviously both good, but I think senior living is also very attractive.
Yeah, and it brings up another point, and I think that you can speak to from your expertise. But the listener who's thinking about, well, okay, Angelo, I can tell, it's really difficult for me to find multifamily deals. Maybe I should consider GroundUp Construction. What about the financing piece of that? How's that going to differ? If we're looking to get into GroundUp as opposed to value add multifamily.
Well, yeah. So like I said, I mean the best options, it all depends on the project. You can go the government route, like you can use FHA as an example, and that has very attractive terms. You can actually amazingly get up to 85% loan to cost, so you have a very low outlay. You can go a 40-year amortization, and with a 3.5% interest rate, you can have a very attractive cap rate. That's very attractive because you have a very long amortization. Another thing that you can build in, which we were talking about earlier, is the future value add, where let's say you want to lock in, as long as that 85% LTC stays in place, for the future valuation of the property, attach a line of credit to it to pay out your investors if you're running a syndication. So for example, we have one here in Houston. It's a $20 million project. And what they've done is they've requested a $3 million credit line to be added to it. And what happens is that is evaluated, every 3 years. And as long as they stay within that 85% loan to value, they can draw more funds and then pay out their investors. And when you have that type of situation, it can be very attractive, because when we looked at, this particular investment group, they were looking at purchasing existing multifamily in Houston. It was about $110,000 a door, and their cost for construction was at $98,000 a door. So they're able to get it for a cheaper price. And with those terms, it's almost like a no-brainer, right? And so I think the key thing, is obviously having the funding in place, and then, having your builder and then your land. So yeah, I mean, to me, it's something that we're seeing a lot of syndicators that I'm working with here in Houston and all over the country, I'm seeing more deal flow that's asking about ground up construction.
What about the, finding the land? I know, the land in some markets is so expensive that we can't consider ground up, because the land cost is so high.
Right. Yeah. I mean, that's something that obviously is critical. And I think that, having a good broker that, or whether it's off market, that is a concern. I mean, I agree. I mean, because if you overpay, whether it's for your construction or your land, I mean, you're going to get in trouble. And so you just have to be, I would say, I think that it's kind of like what Warren Buffett says, and one of the things I think investors, we make a lot of mistakes. I'm guilty of it too, is that we try to swing at every pitch. And you have to wait for your pitch and look for the opportunities, whether that's in foreclosed properties or IRS seizures, or there's tax liens. They're trying to find a deal on land or off market. There's a lot of private listings. I think if you get in good with a lot of like here in Houston, there's some really good brokers that's focused on the commercial side, and they get things sent to them before it goes on the market. And that's who I really work with, is working, because the thing is, everyone's looking at LoopNet. Okay. And that's not, that's okay, but really the big time deals are not on LoopNet. Okay. So you have to really get in good with, a broker, or, whether you have, more insider information. So I think that, because you're right. Because if you overpay for the land, then it's gonna affect everything.
Right. So when we come to you for the debt for ground up construction, if we have multifamily experience, let's say value add multifamily experience, but no ground up construction, are we going to have to find another teammate, or a team member or somebody that has that experience, or how's that going to be viewed when we're coming?
No. I mean, here's the thing. No, even if it's your first time as a ground up construction, that's okay. But you obviously the sponsors all have to have, some type of noteworthy experience in investing. I mean, we do care. The sponsors do matter. It's not like
Sure.
It can just be a Joe Schmo. So we're going to be looking at the personal financial statements, the credit, a few things that are important here: the liquidity of the guarantors. This is a full recourse loan. So that, so like Fannie Mae is non-recourse. When you're dealing with now, let me say this: with FHA, it's full recourse. If we go the private equity route, we have some non-recourse stuff too. So we have to really understand what, the strategy or the intentions of the investment group is, what they're trying to do, because some investors, they don't want to do recourse. Like we do a lot of horizontal funding for developers, and sometimes they want non-recourse loans. We offer non-recourse for developers, and so, and I don't know if any of your followers or do anything with horizontal. We work a lot with developers, large developers, to build out their horizontal funding, but it just depends, right? I mean, so being that if it was your first time and you're doing a multifamily deal as a ground up construction, that's okay. But again, the strength of the sponsor is critical.
Yes. So you mentioned horizontal a couple times. What do you mean when you say that?
Oh, I apologize. Yeah. So you have real estate developers, whether they're doing commercial or residential development for single family or commercial. That's when you're basically purchasing, the raw land and getting the funding for building out the roads, the development, the sewer. And we give funding to developers for that. Let's say that we do a lot of developers that are building out, master plan communities, and they need funding for, let's just say, $100 million. A lot of the times they don't want a personal guarantee added to that to come after, in case the deal falls apart. So we do a lot of non-recourse for developers as well. And we deal with a lot of large developers. So that's called horizontal funding, right? So vertical funding is obviously when you're building, residential or commercial structures on top of the horizontal, which is the land. So there's the two different types of funding.
Good. That's good to know. And then, the a listener who's looking to go into this, okay, they have multifamily experience. Any other way that we can be presented well, to be able to get the type of debt that we need, or a way that, when we present to get the type of lending, and even, if we want non-recourse versus recourse, is there going to be anything else? Why would we get recourse as opposed to going non-recourse?
Well, I mean, if you're new at this, or you don't have the capital, like for example, FHA, if you did a GroundUp Construction is at 85%, private equity is like 70% loan to cost. So that's a massive difference in the capital injection from the sponsor or the investor. You're talking about, let's say you're doing a $20 million deal, and one of them is 15% injection, right? So that's $3 million versus the other deal that they would want 30%, so that'd be $6 million. So the sponsors may not have the liquidity to cover that. So it depends on their financial situation. If the sponsors have a tremendous amount of assets personally, they may not want a recourse loan. Like, we have some investors that have their net worth is several $100 million. And if the deal falls apart, that means that the bank or the investor could come after them personally. So it just depends on, like, we have, one group that we work with, one of the investors is worth almost $1 billion personally. So he has to make sure that anything he does is non-recourse, right? Because for whatever reason, if the deal goes sour, he doesn't want, someone coming after him for his assets, so. Yeah. So it just depends. If you're new, you're probably going to have to do a full recourse loan. I mean, this is how it works.
Yeah.
And as far as packaging, there's firms out there that we work with. And I know we talked about this before on your show, that you're right. If you don't have your stuff together, your paperwork, your pitch deck, to the bank or to the lender, you're going to get denied. It's just the way it is. If you don't have all your financials, everything in place, lenders don't like it when you don't have your stuff together, you're not organized, or your credit's not good, or there's firms out there that I can recommend to you. They can package up everything to a financial plan, because that is a very, very important thing. Lenders, you have one chance with a lender, and they're not going to fool around. I don't have the time for it personally. Like, if the guy doesn't have his stuff together and he's asking for a $20 million deal or a $50 million project, and he doesn't know where his bank account is, or he doesn't know what his credit, so you have to have, these are mega deals, serious business, and you have to have a full package.
So we can actually hire somebody that will help us develop that.
You really do. I think that there's a lot of firms that we work with that do that. Now, obviously, seasoned investors, they already have all this together. But to the new viewers out there, yes, there's firms out there that we work with in New York, and that's what they do. They basically, before anything ever goes to the underwriter, they view and vet everything, and they package it all up, and they check every single document. They actually write the business plan for you, the executive summary. They get all your financials in order, and then they submit it over to us or to the underwriter. So for some people that is a good thing, I will say, because some people, they have the experience, they have the liquidity, but for whatever reason they're not organized, or they're just they're all over the place, and they need someone there as an intermediary to kind of siphon them through the process.
How would we find somebody like that? If the listener's interested in that, and do you know about a cost?
Yeah. So generally from what I'm seeing, that, it depends. They go off of the size of the project. So there's a few groups that we work with, Carlton, and I can email you over this if you want to put it on the links.
Okay.
Carlton's one of them. There's another one, Madison. Realty Capital. These are, out of New York, but generally, from what I'm seeing, that they, based on the size of the project, they normally want a retainer. It starts at like 10,000. And then there's usually some type of value add for the size of the deal. And that can be actually one of the things that can be financed into the loan too. So, which is kind of cool. So let's say you're doing a $20 million deal and they charge, 50 basis points, which is $100,000. That can be added into the loan, for example. So, but I think that if it's increases your probability of getting funded, drastically, then it's worth it. But if you are a very seasoned investor and you have a whole team like, Grant Cardone or any of these other people, they have a whole team that does everything, right? So they don't need that. But I mean, if you're trying to get into it and you're trying to get into some of bigger deals, I think it's definitely worth it.
What kind of pushback have you seen when, there's a newer person coming into ground up development and they are, they're having to get a recourse loan, a recourse debt? As far as raising the capital from investors, it seems like that would make it much more difficult.
Well, so I want to make sure I understand what you're asking. So you're saying,
are investors having trouble raising the capital if they're somewhat newer, but then also having to get recourse debt?
So what I would say that it depends on if you're a new investor and you're trying to raise capital and you are going to have you're doing ground up construction. A lot of these syndicators, what the investors are looking at is obviously performance. And I haven't seen most of the firms that I work with are very seasoned, and we've worked with a few that have tried to get on board, and they had a very hard time getting the funding because people just didn't want to invest in the fund because they didn't have a track record, right? And so a lot when you're trying to solicit investors, and that's the first thing I look at is show me your track record, and what type of yields are you paying out, what's the security. So yeah, I mean, if you what I would say is typically if you're starting off and you're just in the beginning of this, you're probably going to have to invest a lot of your own capital into this, to show proof positive to the marketplace that you have major skin in the game to ease investors' concerns and fears of anything going, south, right? So, because they're not going to want to back you or fund any projects that you don't have significant capital and you don't have a track record. So I would say if you're just new starting, ground up construction it could be tough. It could be tough. I would say if you're new, you probably want to start with a small project and kind of ladder your way into it, because that I don't know. I haven't seen that before though, Whitney, where somebody's raising a lot of money and they're new, and then they're trying to do a big deal. The banks aren't going to like that, and
right. Yeah, I was just thinking about the recourse debt and how that's going to be seen by investors.
So I mean, typically, the way that it depends on how they're structured, whether it's whether they're accredited or non-accredited. Typically there's going to be a signer on the loan. And because of the way that they're raising the money, whether it's a C or an A, a 503, that pass through to the investors, they actually never are on the hook for the PG. It's whoever the signer is of the note, right? So, like for example, if I have a fund that's, I raised $10 million and I get, money from you, and the loan goes into default, I'm the signer on the loan, not you, right? So the recourse the clawback never comes to you. You're the investor, right? But how the loan can be structured is that, you might have a entity that has many limited partners, but those partners are actually not going to sign on the note. There'll be one or two, maybe up to 4 signers. And those are the ones will have and so that's how the investors are protected. They'll never I haven't seen a deal where the actual investor, limited partner, was on the hook with a recourse loan. We wouldn't. No one would do that.
Right. Right.
Yeah.
Right. I would hope not. So a few more questions before we run out of time, Angelo.
Mm-hmm.
But how are you prepared for the potential downturn that everyone's talking about?
Well, yeah, that's a great question. So one of the things that with my experience investing in the markets, and we also deal with trading a lot too, and with futures. And so as a hedge, a small hedge, what we always do is we always sell futures, every quarter. So with the S&P and the NASDAQ. So it's kind of like a hedge. You can sell calls if the volatility is very high, or you can sell futures. So for example, if we have, let's just say that we have, $100 million in lending exposed, we may sell futures, short the futures of the S&P or the NASDAQ, or sell calls, up to $5 million. And so basically it acts as an insurance policy in the event of a downturn. It's not a complete hedge, usually 5 to 10%, because you're right, the market is at all-time highs, right? Real estate, stock market. There's a lot of political things going on right now, especially you saw with Iran and all these things. So you don't know, right? So you always have to have some type of hedge in place, in the event that something happens. So I don't know if any of your investors are involved in the markets with stock or futures, but we use the because the futures is the most liquid market. The U.S. futures is a trillion dollar industry where all the money goes, and so that's what we do. So yeah.
Wow. What's a way that you've recently improved your business that we could apply to ours?
Yeah, one of the things I'm going to tell you, I don't know if any of your followers, do they do anything with, because another thing that that I want to mention, another asset class that we've gotten involved into and has diversified our portfolio, is mobile home parks. Mm-hmm. Investing in funding mobile home parks, and then also
definitely there's definitely some listeners. Yeah.
Okay, and then self-storage. So self-storage and mobile home parks is some things that I've gotten involved in personally and that we funded. And you can actually get SBA funding in some very attractive terms. So one of the things that's helped to improve our business is diversifying the portfolio. And some of your viewers may find that mobile home parks are another great opportunity, another attractive yield investment, and self-storage. So because, again, going back to that, multifamily is kind of, thin. Well, what about mobile home parks and destination areas like Florida? Right outside of Orlando, I picked up a $3 million mobile home park, and I'm getting like a 12% cap rate on it. So I mean, those type of things that I think that viewers, there's a lot of stuff out there, and a lot of people don't think about mobile home parks. Or obviously self-storage is huge too, but those are things that have helped us and maybe help you or your followers. We fund those. We love mobile home parks.
Wow. And what's the number one thing that's contributed to your success?
That's a great question, Whitney. The thing that, the thing is I always want to be a student and learning. Right. I'm always trying to figure out and learn more. I hope that since the last time you spoke to me that I seem more knowledgeable, because I always realize that you don't know what you don't know. And you always have to be searching and seeking to learn more. There's so much information out there, and you can never stop learning. You have to be a learning machine and be a master of your space, whether you're running a podcast, whether you're an investor, you're a lender, because so if you stop learning and you think that's all there is, you're wrong. There's so much out there to learn. And the more knowledge that you have, just like Warren Buffett talks about, the more that you can earn if you apply it. So I think that in the beginning of my career, where I made a lot of mistakes, is I would tell investors or clients, no, that's not available. Sorry, I can't help you. No, we don't offer that. No, you can't do that. And I never really pushed myself to figure out if it was really out there, and one of the things I've changed in the last 5 years that's helped me is that I really push to find out if it's really out there. Is it available? Is there a market out there? Or can we create a market? Can a market be created? Like right now, I'm seeing a big push for container homes. You may have heard of container homes.
A little bit.
But they're having a hard time getting funding. And someone approached me about a $300 million container home project in Florida. And before I was like, no, you can't do container homes because the agencies haven't picked it up. But there actually are private equity that do container home funding, right? So I would say always be a student, be a learning machine, just learn as much as you can.
I actually got to see a container home when I was in Florida not too long ago. So very interesting.
Yeah, it is very interesting. It's crazy, man. I think that you're seeing builders, investors. If the agencies pick that up like FHA or Fannie, I mean, it's gonna take off. It's gonna go crazy, man.
So how do you educate yourself or stay up on things and learn, find new things?
I mean, always reading, learning online, going to conferences. You go to conferences, go to meetups. I would highly recommend, like if you're ever doing a meetup, please invite me. I'll be there. I think that we're hosting a bunch of meetups this year. In fact, to meet more people, learn more, go to these events in Vegas or in Orlando. There's so much to be learned. We'll be building relationships, like meeting you, and maybe one day you host an event, I'll be there, or I'll host an event, you come to mine, and you get around the same like-minded people, building those relationships, going to those events. This year I'm scheduled to go like 20 events. I want to go to as many events as I can to learn, meet other people that know, because the knowledge is out there, the information is out there, but maybe I don't know it. So somebody else has that information. Instead of being conceited and say, well, I know everything. No, you don't know everything. Go meet other people that are doing it, and learn from them. See how are they doing it, and then I think that's a huge thing.
For sure. And then how do you like to give back?
Yeah, that's a huge thing. So the biggest thing with me, I always talk about, you have, Maslow's hierarchy. I think the first thing is, you have to get stabilized. I had to get stabilized with my life. I grew up very poor, had nothing. So after you and your company get stabilized, you have to contribute and give back. So the biggest thing that I always make sure that I give back to my team. I make sure my team is taken care of financially, spiritually, mentally, my family, my children, and then all of my partners, my vendors. And then lastly, we have Angelo Christian Foundation, which is giving back to the world. No Child Left Behind, helping children with the foundation. Either children that they've been in a tough childhood, they've been evicted, abandoned. We give back. We give a percentage of our revenue, our profits, back to that foundation. And so that's our order, is taking care of our team, the family, our investors, our clients, and then Angelo Christian Foundation.
Awesome. Thank you for sharing that and giving back in that way. Angelo, tell the listeners how they can get in touch with you and learn more about you.
Absolutely. Yeah, guys, if you ever need real estate funding, we cater to investors. We love working with investors all over the country. Angelo Christian Financial. You can actually reach us at 832-431-6331 or official AngeloChristian.com is our website. You can check us out on Instagram, official Angelo Christian, or our YouTube channel, Angelo Christian. Please give us a call. We'd love to help any investors out there with real estate funding.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.